This homework assignment is Try-It 19-2. We're going to journalize materials and labor. So we are to record the following journal entries for Smith Company. Here are the entries, but we really don't need this because the explanations are right here. So the first transaction, we're going to purchase raw materials on account for $10,000. Switching back to one of our slides from the videos, when we are purchasing raw materials, we're going to be using this account here. Notice it's an asset account since it's an inventory account. And since this account is going up, we need to debit the account. So raw materials are increasing by 10,000. And then the credit has to be 10,000, obviously. And since we are purchasing it on account, that is accounts payable. All right, next we're going to use $6,000 in direct materials and $500 in indirect materials. So let's go back to our workflow diagram. So we're going to take some of these materials out of this account, and the direct materials go into work in process inventory, another asset account. Direct materials are the ones that can be traced directly to the product. In this case, in this workflow diagram, the products are guitars. So any materials that can be traced directly to one guitar versus another guitar, those are direct materials. And direct materials, when they're being used, they increase the work in process account. Now let's talk about indirect materials. So indirect materials are things like this glue. Things that cannot be traced specifically to one guitar or another, or not cost effective to trace to one guitar or another. For example, would it be cost effective to count the drops of glue for this guitar versus this guitar? No, it's not cost effective. So when glue is used and other indirect materials, we put them in the manufacturing overhead account. This account, remember, is a temporary equity account, but we're going to treat it like an expense, which means it increases on the debit side. So anytime we debit this account, what we're doing is we're accumulating manufacturing overhead. These are the actual costs. The only time you lower the account is when we're going to allocate some of these manufacturing overhead costs to specific jobs based on the job size. So we're going to accumulate them on the left side, and then later on in the chapter, we're going to allocate to them to jobs. But right now, we just need to accumulate the cost of these indirect materials, and we're going to put them on the plus side, the debit side of manufacturing overhead. And the amount was $500. So the $6,500 credit is just the materials leaving the raw materials account and going to work in process and manufacturing overhead. So we need to lower the raw materials account by $6,500. And next, we're going to have labor costs, $8,000 of labor costs. We have to pay our people. And 80% was direct labor. So let's talk about direct labor. So direct labor means the people, like Willie the woodworker here, working directly on the products. So notice the factory floor is really the work in process account. So any direct labor is going to go into the work in process account, and it's going to increase it on the debit side. So direct labor is going to increase work in process inventory, so it's going to add costs to those guitars. And 80% of 8,000 is $6,400. If you like using the calculator, I just calculate that by saying 8,000 times 0.8 or 0.80, same thing, $6,400. If I want to shoot it into this cell, I click on this cell and I click the arrow, and there, it shoots it over there. I don't have to worry about copying and pasting or mistyping it. All right, so if 80% was direct labor, then the rest, 20%, was indirect labor. So 8,000 minus 6,400 is $1,600. But now how do we classify indirect labor? Well, indirect labor, just like indirect materials, goes to manufacturing overhead. These are actual costs, so we're going to accumulate them on the left side, the debit side for manufacturing overhead. And then the $8,000 credit is wages payable. And that's it.